in front of you. Congratulations, you made it to the afternoon of day 2 of the conference. I know you can see the finish line. Hopefully you're ready for a sprint finish after a coffee as well. My name's Tom Thackray. I'm the Programme Director for Decarbonisation at the CBI. That's the Confederation of British Industry. So we represent large, medium and small businesses right across the country in all different sectors. And it's my pleasure to introduce the next session, which is going to be talking about how we develop successful carbon markets. So setting carbon prices and trading is recognised as a really key tool in the toolbox for cutting emissions and reaching net zero. And these frameworks can also provide a really important catalyst for investment in infrastructure, including carbon capture and storage. So how do we make the most of them in the years ahead, and what are the barriers to success that must be overcome? To help me answer some of those questions, I've got a distinguished panel with me. So I've got Dorrian, who's the Head of Sustainable Finance at the London Stock Exchange. I've got Dalia Majumder-Russell, who's a partner at CMS, the law firm. Hopefully joining us online at some points should be Matthias Krey, who's the Secretary General of the CCS Plus initiative. And at the end, last but not least, I've got Jean-Philippe Brisson, who's a partner at Latham Watkins in the United States. So perhaps I can start with you, Claire. It's been a busy year for the London Stock Exchange when it comes to carbon markets. Perhaps you could just introduce a little bit about what you do and the significance of what you've been doing as well.
Sure, yeah, thank you very much. And I'm delighted to be here today, so thank you very much for the opportunity. You're right, it's been very busy for us at the Exchange. Actually, as part of the Exchange Group, we already have, before we've actually made our announcement last week about sort of going deeper into the carbon markets, we have a business called Point Carbon that is part of the group with the Refinitiv transaction that we did just over a year or so ago. So we're already sort of involved in the compliance market research and really sort of, I think, it was a natural place for us to look at as an exchange around, well, how can we help to support some of the scaling up of this market, and how can we look at helping with the supply of carbon credits? And we came at it from the angle, and we announced this just over a year ago at COP last year. How can we build some of those foundations that would support a public market regulatory framework to channel financing into climate mitigation projects that ultimately will dividend out carbon credits to those investors and therefore help to meet that demand. So we came at it a very different angle to perhaps many other exchanges and marketplaces that are looking at how do you support the demand and how are you supporting the trading of those carbon credits. We've actually come at it as a very different angle and thought, well, what do exchanges do well? We are about helping to convene the markets and facilitate financing through our markets such as AIM and the main market. So that's where we've chosen to focus in the primary market piece to really sort of enable their financing to flow into carbon mitigation projects, and also to provide an opportunity for potentially to investors to be able to procure carbon credits in the future. And those we think could be corporate investors alongside institutional investors. So we have a set of rules now that are in place already that companies would be following to list a fund or an operating company. So use the regulatory environment of the FCA, all the admission disclosures and the ongoing requirements, the market abuse regime that exists. And then we are including on top of that some specific requirements that are pertinent to the voluntary carbon markets that really help to improve the piece around sort of disclosure of project types and which standard bodies those projects are recognised by, and the level of investment that those funds or operating companies are making into those projects. So really I think our goal there is how are we going to be able to help the financing, and how can we help companies on their journey to net zero, recognising that there is a place for internal strategies around decarbonisation, of course, but actually how do companies also need to look at offsetting strategies in the future as well?
Brilliant, thank you, Claire. And I would definitely come back to that from the corporate side and some of the drivers that they're facing. But turning to Dalia, and how you're seeing things from the legal side and the the clients that you advise, I suppose, and what they're interested in when it comes to carbon markets and the kind of advice they're looking for from you, I suppose.
Yeah, no, thank you. So I'm a partner within the energy and climate change team. So anything that I look at is sort of from a climate change angle. And I can tell you over the last 10 years of doing CCS and carbon markets, we've come down a complete roller coaster, as many of you in this room know. And so the kind of advice has shifted from looking at what sort of carbon price support signals do we need as part of a bankable project, to more recently as where does carbon offsetting fit in and how do we actually give the integrity and the transparency and certification that it needs in order to be financeable, you know, what role do the exchanges play and that Claire was talking about. And the voluntary carbon markets over the last 2 years, you know, with the change to Article 6 under the Paris Agreement, that's really brought in a whole bunch of new players. So from a legal perspective, we're looking at carbon markets are not new, offsets are not new, but the entrants coming into it have very specific needs. And so how do the carbon markets address this? Where are the, you know, too loose, too lax gaps that we need to fill? And how can we help guide that? Obviously, we don't deal with things like price discovery, but what can we deal with traceability and certification? And for things like hydrogen and CCS, is how is it an adjunct? So you have, you know, carbon removals and reductions, but then how else does an offset help in that overall business model? And that's the kind of legal advice that we've been focusing on more recently.
Brilliant. And Jean-Philippe, you're US based, so I think we'll be interested to hear the sort of the differences, I suppose, and you know, what you're getting from your clients in the US and how that market is developing in a different way in the US.
Sure. Well, thank you very much for inviting me. It's a pleasure to be here this week. I've had the opportunity to do a lot of these in the US, but I can tell you they're not as much fun as they are in London, so it's been a great week. I am JP Brisson. I am a partner at Latham & Watkins in New York, where I head up our CCS team. We advise clients on CCS projects globally. Most of them are in the US, but we have several in Europe and several in the Middle East. To your question, right, I think carbon markets, including voluntary carbon markets, may have a very significant role to play in the CCS space. I think it is widely recognized that, you know, we need deployment of CCS projects at scale to achieve the Paris Agreement targets, right? We know CCS is overall a fairly recent technology that requires support from governments and other mechanisms to move forward if we want to have the scalability that we are looking for, right? And voluntary carbon market provide one additional stream of or source of revenue for CCS projects, right? So in the US, it is very much accepted today that voluntary carbon offsets are one more type of environmental attribute that can be generated by a CCS project, which is in addition to other support mechanisms, right? So we have CCS projects in the US that currently are eligible to receive 45Q tax credits, in some cases LCFS credits, in some cases renewable identification numbers, and carbon offsets, right? And the idea that you can stack, this is the term that we use in the industry, the idea that one can stack 4 environmental attributes is well accepted and considered to be one additional source of funding for these projects. As a matter of fact, when I was at Goldman Sachs in 2008 on the carbon desk of the global commodities business, I did the first CCS project that generated offsets in the United States. And by pure coincidence, this very month, the non-for-profit American Carbon Registry that had issued this CCS offset methodology has just issued a new offset methodology, which is currently open for public comments through November 1. And this methodology provides for the creation and issuance of carbon offsets for CCS projects that are direct air capture projects or conventional CCS projects with EOR or pure sequestration. The geographic application of this protocol is US, Mexico, and Canada. I think the question that is before us today is whether projects located in the UK and projects located in the European Union will also have access to this additional flow of funds resulting from the voluntary carbon market. I can tell you that there's a demand for those types of credits at the global level. The question is, will there be a mechanism in the EU and in the UK that will allow project developers to monetize such credits? And I think that's an open question. If I come back here next year, maybe we'll have an answer.
Sounds good. Thanks, JP. And just to follow up before we move on, just you focused there on the voluntary market, but then the regulated market is sort of, touches on parts of the US as well. Is that also a driver of CCS projects? Why do you tend to focus on the voluntary side of things rather than the emissions trading side?
Well, in the US, except for the state of California, Oregon, and Washington, there's no uniform ETS that applies to CO2 emissions, right? So most of the projects that you read about that I work on in Texas, Louisiana, North Dakota, Wyoming, Wisconsin, all of these projects essentially today currently emit CO2 that is not regulated, right? So if one just comes in and captures the CO2, there's no avoided cost, right? But these projects are eligible to generate a number of environmental benefits, the 45Q at $85 per ton, and LCFS credits at $150 per ton, a RIN $5 to $10 per ton, right? And the reason why there's such a surge of interest in CCS projects in the US is because some developers have identified the low-hanging fruit, meaning projects which are strategically located in close proximity to a pipe or a sequestration well, sometimes existing because of EOR, sometimes a new sequestration well for sequestration purposes only. And when one has the ability to kind of stack those attributes, it becomes financially possible to do the project. So what you read about in the press are essentially those projects that, because of their location, because of the CO2 stream that they emit, allow the developers to essentially design something in a very cost-efficient manner.
Brilliant. Thank you, Jean-Philippe. I'm going to do the Eurovision bit now and see if I can bring Matthias Krey in on the line. I don't know if I can. Oh, great. Looming above me, Tom. Matthias, hi. You can. Hopefully you can hear me okay.
Hello, I hear you okay, Tom. How are you? As you do the Eurovision song contest thing, yeah, here's Germany. Germany is online.
Well, thank you, Germany. Perhaps you can give us your scores. Well, perhaps you can give us a score for the carbon markets currently, but just more fundamentally, just give us a sense of what CCS Plus initiative is and does, and its link to this topic, if you would.
Sure, happy to do that, Tom. And hello, everyone. And thank you for having me here. I was supposed to be with you on the panel now. That unfortunately didn't work out because my flight this morning got canceled, but we found other means of participation. So thank you for making that possible. Yes, my name is Matthias Krey. I'm Managing Director of Perspectives Climate Group. We are a boutique consulting firm working on carbon crediting across the globe. And I'm also the Secretary General of the CCS Plus initiative. So what I want to share with you on the next couple of slides really briefly is why are we doing what we are doing at the CCS Plus initiative? What does our work plan look like? And how is this relevant in the context of national and supranational frameworks, for example, for MRV and for incentivizing CCUS projects? And some of those have been touched upon already by former speakers, and I would like to expand that on this a little bit. So let's start with the why on the next slide. JP just mentioned that there is now an ACR methodology under consultation in the US and in the scope that JP mentioned. We also have other limited in geographical scope and limited in project type frameworks, methodologies for carbon crediting that are either approved or under consultation around the globe, but there isn't yet in sort of all-encompassing framework that can be used around the world and for a large number of projects. And that's what we wanted to change when we started the CCS initiative last year. So we want to build the methodological foundations to enabling carbon crediting for CCUS type of projects on a wide scale with a comprehensive framework for the VCM, starting with Vera/VCS, but going beyond that and to do this in a collaborative approach under one big tent to ensure quality, consistency, and impact. And with whom we are doing this, you will see on the next slide. At the moment, we are working together with 40 partners. There you can see our core partners, which are also our founding partners that helped the initiative take off. Since then, more partners that you can see in the core partner and technology category have joined. And the partners contribute financially as well as with their expertise to the work that we are doing. Because South Pole and Perspectives, we are administering the CCS Plus initiative. We are also providing our carbon consultants to the methodological work. But what we need, and I think everyone in this room agrees, is we need real experts, for example, on geological storage and other aspects, to work alongside our methodology experts. So that's where our partners are vitally important for the success of what we are doing. And we are also supported by a great advisory group that provides guidance, input, and feedback to what we are doing in general, as well as to the documents that we are going to put out, as well as to inform discussions on crunch issues that you ultimately stumble across when you are working on such an endeavor. And as I was mentioning before, Vera/VCS is the standard where we are planning very shortly to submit our first methodological outputs to. They have helped start the initiative, but they are, of course, as the standard and regulatory body here, working on arm's length with the CCS Plus initiative. So how does our work plan look like? That's what you can see on the next slide. On the left side, you see that we are actually differentiating between CCS and CCU. So you can see that we are working on two separate methodologies. One is called the CCS Plus methodology, and the other one is called the CCU Plus methodology. And it's called Plus because we are building our methodology in a way that allows for the accounting of emission reductions as well as removal. So this is the broad scope that we have been referring to, that I've been referring to at the beginning. And the U in the CCU Plus stands for long-term utilization for the moment. So this is the focus in our work plan for the time being on long-term storage. And you can see the three columns to the right-hand side. You see the modules that are included in our work plan that we are developing across the three value chain segments. So you can see there capture, transport, as well as storage. And the idea is that you can, if you have, for example, a project that is about direct air capture, transport and pipelines and storage in saline aquifer, then you choose the appropriate modules that you need from the value chain modules and combine this with the CCS methodology, and this is what you're basing your application on if you want to submit your project to Vera/the VCS. And we are expecting now that we are going to go into public consultation in the next couple of weeks with the CCS Plus methodology and a number of modules that we are really in the final stretches of completing, and then we will see them out for the public for comments, and we are really looking forward to receive comments from the public and all of you that want to provide inputs. So the last question, the question I want to deal with on the last slide is the question of how is this relevant, beyond project-based carbon crediting in the voluntary carbon market. And here, this has been mentioned by the previous speakers, we are talking about one, MRV frameworks, and B, incentivization frameworks. And of course, they are coupled. They cannot be seen in isolation. Every incentivization mechanism would want to have a robust MRV framework working alongside with it. So we can see here the different levels at which these incentivization and MRV schemes can take place, and we've heard a couple of examples already where our methodologies potentially could be useful to be applied in those two segments. And of course, this is the Article 6, but it's of course also the process of designing and consulting on the business models for CCUS, including BECCS in the UK, for example. I agree with what JP has said, that regardless of the location, regardless if we're talking about the UK, if we're talking about the US, or if we are talking about the EU, it's important that we find a way of stacking revenue sources rather than excluding them from each other, because we, for sure, are dealing with a new type of technology with a lot of operational uncertainties. So, every contribution on the revenue side helps making, facilitating investments into these kinds of projects. And regardless if it's a carbon contract for difference model or any other kind of model, we think that it is important, and this has caused us some headaches in the CCS Plus initiative already, to make sure that one source doesn't exclude the other. Particularly, we have with carbon crediting the principle of additionality that we need to adhere to, so that those projects would not have happened otherwise. And if a governmental regulation excludes the opportunity for carbon crediting, then this can be a problem for financing those projects through the carbon markets, or putting it the other way around. If a governmental subsidy should be too high, that it excludes carbon crediting, then also from a taxpayer's point of view, that's not an ideal use of resources. So we are hoping that in the case of the UK, as well as in the case of EU, whereas now the discussion of integrating removals into the ETS, as well as building the framework for the carbon removal certification scheme, that we can contribute there with the methodologies that we have built. So I leave it there for the moment, and back to you, Tom.
Thank you, Matthias. And so we've got about 15 minutes for Q&A. So I've got a couple of questions myself, but do be thinking of your questions for the panel that we have. But a selfish one, given membership of the CBI is full of corporates who've set themselves net zero targets for 2050, sometimes before that. I think sometimes voluntary carbon markets have got a bit of bad name in recent years. What should give them reassurance, I suppose, that there's integrity in some of these initiatives, that they can actually ensure their investors and their customers that they're doing the right thing and it's in line with the commitments that they've made when it comes to decarbonisation? I don't know if who wants to take that.
Go ahead.
Shall I start?
Yes,
and then
absolutely.
I think Claire, you probably have the best knowledge on this. I think a large part, you're absolutely right. We've got commitments to decarbonise, and we've also got the stick of greenwashing. And I think greenwashing is a really big risk, and something that has given people pause for thought when they think about carbon offsetting. The other thing is, of course, the charge of, is this just a get out of jail free card? I mean, should you be doing something else? And I think the answer to that is, of course, you should be doing something else as well, because investing in renewable energy, investing in actual projects is really important. But the reality is that carbon offsetting does need to play a role in it, because we cannot get there 100% without some offsetting. And it's what do you offset into and how do we measure it? I think the reality is that there have been projects that haven't had the most stringent of methodologies, the most stringent of audit rights. And it's a question of trust. If we don't have the trust in the voluntary carbon markets, then that undermines the price and that undermines the ability of the people to do it. So I think this is where exchanges, I think, are incredibly important. There are a number of exchanges, and London Stock Exchange is joining that, who are looking at standardizing, information sharing, that traceability, because the best thing we can do is if we give the market the choice of paying a premium for things that are truly additional, especially as renewable energies come down in price and you no longer have the justification of, we wouldn't build this CCS project because it's cost too much. So we really got to think about what is their national additionality, what is it really offsetting, and how does it really add value. And I think once we can build up that trust, then I think businesses will have the confidence that this is actually something that they want to be part of.
Yeah, look, I'd echo a lot of that. I think that, yes, about trust, but it's also about, kind of understanding about participating in the market, because I think that, there's still sort of, you've got a backdrop of regulation, you've got net zero targets being set, you've got TCFD becoming mandatory, you've got UK government talking about, mandating transition plans. So there is that, sort of wave of expectation from a regulatory angle. You've got sort of the investor engagement and stewardship that comes in there as well. And corporates trying to sort of navigate, how do they look at their own internal decarbonisation strategies, and how do they marry up with an offsetting strategy that is appropriate for their business, and does it meet their own values? Is it about where they're investing in areas in which they operate themselves as businesses? What project types have they got a preference for, or otherwise, or which sustainable development goals that they want to be aligned to? I think there is just such a myriad of choice out there, so actually that can lead to not necessarily feeling that they've always got the right, information, and therefore can make decisions, without, full knowledge. And I think that goes back to the point of what you need to have is around, transparency of information and disclosure. So then actually investors can make the choice as to whether or not they want to, in our case, obviously talking about a listed fund or a listed operating company. If the information is out there in the market publicly, then it is the investor to choose as to whether they want to invest in a fund that, solely has part of their portfolio nature-based projects, or whether it is a fund that is invested in part nature and part technology-based. So it's about, choice through information, and then having some robust regulatory structures around it that actually, in the case of what we're doing in the London capital markets, is already there. So you're leveraging off an already well-known public market framework.
JP?
Well, I think these are great question, and I would wholeheartedly agree with what you two have said. I think we just need to leave aside the retail segment, because I think consideration for transaction with consumers are obviously raise issues that are unique. But I think any company is sophisticated enough to make their investment decisions. If they buy the wrong type of offsets, well, it's too bad for them. I don't know why they should be protected. That's my view. It's very clear that there are 4 leading carbon registry worldwide. I do not see why in the world would anyone buy a carbon offset that is not issued by any one of those 4 registries. If you go online, you will find out that each registry is a non-for-profit, has an independent board of directors that include stakeholders from various industries and governments and environmental groups, right? Each offset has a unique serial number, is traded on a registry that, publicly discloses the issuance of each offset and the retirement of each offset, and provides documentation supporting the claims of additionality, right? So as long as you stay within that framework, I believe that the risk is very low. And to my knowledge, there hasn't been any significant accusation of any improprieties associated with these products. Obviously, anything outside of these registry is a totally different question, right? And then I think from a company's perspective, right, it's all a question of having disclosures that are truthful, right, accurate, and does not mislead stakeholders and shareholders, right? So if a company decides to meet a voluntary target of greenhouse gases using offset, well, this is not an emission reduction. It is a claim of offsetting that must be supported by the retirement of individual offsets, right? So this needs to be disclosed. This needs to be reported in the CDP and the other, reporting framework that exists out there. And as long as, issuers and companies remain truthful in their representations, I believe we can continue to grow the market and bring additional capital to this market, which is required to reduce emissions in the long run.
Thank you. Before I open it up, Matthias, did you want to come on this point?
Yeah, just very quickly. Thank you, Tom. For enhancing the trust in the VCM, I think transparency is vitally important. This has been mentioned already, and not only on the project itself and its qualities, but also regarding the claim that has been made with the carbon credit. And JP has mentioned already the offsetting claim, and what we are observing is that that players in the market, get more uneasy every day with the fact that also developing countries, historically the largest source of carbon credits, are having targets under the Paris Agreement, and that an emission reduction or mitigation outcome, as we say, under the Paris Agreement actually might be double claimed. It might be claimed as an offset by the company buying the credit as well as the country where the credit originates from, because the country might count it towards its nationally determined contribution target. And we already see a very strong debate among players in the market whether that really is an issue or not. But what we are observing is that corporates are taking it more carefully and taking this risk of double claiming and criticism of offsetting claims very seriously at the moment.
Brilliant, thank you. Over to you now, the audience. So take questions one at a time. I think you were first there.
Well, I'm Hamish Wilson from Matthias. I feel like you're talking around the issues which I feel we need to address. When can I, or how can I, fund, say, $1 billion CCS project secured against the revenue stream from the ETS or the carbon markets?
Challenging question. Does anyone have a sense of when that's going to be possible, how they see the market developing to make that possibility?
Well, you just need to find an off-taker that's going to agree to buy from you. Essentially the source will have an avoided cost for, the lifetime of the project. There's obviously, the difference between the EU system and the UK system and the US system is that in the US, the price is fixed at 85 and you know what it is. And then you have the additional stackable attributes that provide the offside. So most models basically provide a downside case that is locked in at the $85 price, and then the upside is up for grab, right? The issue with a system that is exclusively based on an avoided cost is you don't know what the avoided cost is. If it's €150, you can do a lot of CCS in Europe and the UK. If it goes down to 50, not so sure, right? And if you don't have a credit-worthy counterparty that's willing to give you an offtake and monetize those avoided costs over 25 years at a fixed price, then you have a problem, right? That's why you need additional support.
Capital going into the US because you can get funded projects outside the US.
It's more difficult. Yeah. That's true. That's true.
I think your challenge is perfectly right, and the answer is you cannot just be a purely offset project of the scale that we're talking about. That's why it's a revenue stack. That's why you need another form, and this is why we've been working on the business models, because offsets are an additionality. I don't think they in themselves, of the scale of projects that we need in CCS, can be your sole revenue stream.
No, the offset you're going to get $5 or $10, maybe 15 at the most. It's not going to get you a project.
Thank you. Other questions? Yes, here.
James Hughes. The issue of additionality is all very well. You must also bear in mind permanence. That's often missing. And I must say, the RED Plus initiatives for land use, forests particularly, they've had an awfully bad reputation with scams, fraud, and fire and all these things. So land use is a real risk, particularly for BECs.
Yeah. Well, obviously, you cannot believe everything you read on YouTube or watch on YouTube. Right? That's the first thing. The RED Plus buffers established by the leading registries are overstocked relative to the reversals events that you've seen. So far, the offset programs that currently exist have complete integrity, despite what you may have seen anywhere. With respect to CCS, if you look at IPCC data, right, you will find out that IPCC estimates the risk of leakage from CCS project to be less than 1% over 1,000 years. If you go to the US and speak with a company like Occidental Petroleum that has been injecting since 1977 in the Permian Basin, you will find out that the CO2 leakage is also very, very small, in some cases non-existent. And these are on storage fields with EPA permitted Class 2 wells that have very significant leak detection models, right? So, of course, we need to be very careful about the risk of a CO2 leakage, and any CCS project needs to address this. But the potential for CO2 leakage cannot be the obstacle to deploying capital in this space. Otherwise, we will be in the same place 20 years from now where we are today, and that is not an option given the current temperatures.
Yeah, I completely agree with that obstacle point, and we also have projects closer to home in Norway who are also storing. Yeah. And the other bit to say is, in a regulation, we also have pretty hefty financial liabilities as part of the storage permit. It comes from the oil and gas regime in terms of the leakage risks there. So to technical assurances, which I as a lawyer cannot speak to, but there are very good reports, very good studies that say that the risk is incredibly low. And from a legal standpoint, there are then protections for this possible risk of leakage through the regulations, through the financial liabilities that are then on the operators.
Thank you. Other questions? Yes, please, just in the middle here.
Paul Davis, I don't know how many of you saw Sir David King's video yesterday, which was describing the poo we are all in, but there's an urgency question. And Tom, I think you talked earlier, I heard you saying about sort of everyone, all corporates decarbonising by 2050. I asserted in that session that I think corporates that are light emitters should commit to decarbonise by 2030 and heavy emitters by 2040. Question to you all, do you agree? Should Stock Exchange and CBI be encouraging that behaviour? And on carbon removals, any such plan will have residual emissions and need carbon removals. And I again asserted, don't wait until 2049 to start buying carbon removals. You should work out how much you need now, how much you will need at your net position and start purchasing those, ramping up to, say, 2030 to your long-term sustainable level. So do you agree on both counts? And is it the role of things like the CBI and various exchanges to encourage that type of behaviour?
Brilliant. Well, I've got a question, so that's good. Yeah, I think it is the role of the CBI to sort of encourage that best practice amongst businesses. I think we had a flurry of activity up to COP26. I think trading conditions that we're seeing amongst members are difficult now, so sort of encouraging that long-term ambition is challenging, but I've seen no backsliding from our members. I think the challenges that they face, I think, is having perfect information and having the expertise that they need to deliver the plans and the targets that they've set themselves. So, on our part, what we've committed to is being a forum for that and enabling those who have set themselves the fastest and the most difficult and challenging targets to be able to share their best practice with others within our network. So it's definitely a commitment that we're close to. And Claire?
Yeah, I would say that I think we all have a role to play. Different parts of where that sits, sort of in the value chain, I think is different dependent on the organisation. Now, we certainly see the exchange is very much a convener of the market, so about bringing those different sources of capital together, bringing together investors and corporates. And interestingly, I think when we were going through the exercise of how we were building the rule book for our designation, we spoke to a lot of corporates about where they were in their journeys to setting net zero targets, and it was really varied. very much so that, that some companies were either sort of resetting the timetables, so to your point about, and actually, we've done that as well as LSEG, as a group, as a listed company. We've reset our ambitions around sustainability and looked at our net zero targets and brought some of the timings forward on that. And I think that's what you're also seeing in other corporates. But they're also just looking at when does offsetting within that journey fit. Some are talking about not offsetting until 2030. Others already have quite advanced programs in place, or others have got a very nature-based portfolio, but actually want to diversify that out into more technology projects. So I think it's so many are on that journey of how should they best get there, depending on the sort of the nature of the business, the sector of the business. But I think we absolutely, as an exchange, have a role to play to be able to be a venue to be able to provide finance to companies as they are transitioning, and also to be able to provide education support, whether that's in the form of things that we've done before in the past around leveraging some of the transition pathway initiative data, and giving clarity on sort of where managements are on their journey to net zero and decarbonisation, or whether it's about working with the UN Sustainable Stock Exchange and producing guidance to help companies understanding their climate reporting disclosures. So I think possibly short answer is I think yes, we have a role, and but it depends on the different sizes of business and where they are in their own life cycle.
Brilliant. We are running out of time, but I'll just give the panel just a chance to kind of summarise. And there's a danger that you ask for a silver bullet recommendation at the end of these panels. I'm not going to do that, but just what should happen next, do you think, to sort of really increase the potential of carbon markets and sort of, because we've talked about a lot of potential and its catalytic effect on low carbon projects. What do you think needs to happen next? Perhaps JP, I could start with you.
Sure. I think we need to continue to provide education and information and advocacy around those issues to make sure that the right messages are out there. There are obviously certain groups that, do not see any future for the fossil fuel industry or the energy sector as a general matter, and obviously we'll want to push back against anything that would essentially enable that industry to transition, right? So I think we need to be very careful in that sector. And second, we need meaningful participation. We need participation in market. We've just heard from the gentleman in the CCS Plus that they will have a public consultation. I encourage all of you to participate in that. There's one by ECR, and there will be others. So I think participation by various groups and collaboration is what's going to make this market stronger. So,
brilliant. Thank you.
I agree with that. And just to kind of take a slightly different thing, I think we need a menu, which is what the stock exchanges then can provide. We do need more removals in there. I think last year it was only 3% that were purely removal projects, and we need more removals on there. So we need that to be structured in a way that is understandable and digestible, and the whole education piece. And then I think we need to look at our financing models. The current approach of you pay on delivery puts a lot of risk on one side, and I wonder if there's a different way that the market come up where it prices additionality, prices the types of different offsets, values things like biodiversity in a different way, and whether the financial price signals can help drive some of those behaviors.
I would say we need some funds to list on the market and use our rule book as a first one. But actually, in all seriousness, I think it is about it's about meeting the pace of change. We've actually got to just move fast on this agenda. Yeah. We really have. And we do need to collaborate across industry, across regulation, policymakers to make this happen. And I think you are starting to see some change in the way that offsets are being procured within organisations, and we've seen from the conversations we've had the shift from marketing and procurement and sustainability into more of a financial function and sitting in treasury and finance. So I think that is probably something that we're going to see more of happening in the future. But I think it is also just about collaboration to make this happen, but also just amplifying how important this is, and to get away from some of the demystifying of the commentary that might be around some of the negativity in the market. So actually, I think if you convene, you collaborate around that as well, hopefully that will have that positive impact on the pace of change that we need.
Fantastic. And Matthias, I'll give you the final word from Germany.
Thank you, Tom. I'm going to give a two-part answer to the question, wearing two different hats. First, the one of an EU citizen. I agree that the US has been moving, faster on carbon removal and CCUS incentivization schemes, and I would want the carbon removal certification scheme to be widely successful, and incentivize removals here in the EU on a large scale too. I think that methodologies play an important role in that, which brings me to the CCS Plus initiative and my second part of the answer. And there, as JP said, we are really looking forward to get as many comments as we can because on our methodology that is going to go out, because the more stakeholders participate in those consultations, the more credible is the outcome at the end, and I think that is really needed for the market.
Brilliant. Thank you, Matthias. And thank you all for your participation and your thoughtful questions. Perhaps you can just thank the panel in the usual way. So I believe the fun doesn't stop. There's the next panel is going to follow very shortly. Please stay in your seats. There's no break now, so we'll just have a quick change around and then on to the next one. Thank you.
I'm glad we got a screen. That's good. Yeah. Guloren's going to be up next. Okay. We've got the clock. Okay. You, Olivia, you okay? Okay. Good afternoon, ladies and gentlemen. We move on to the next plenary session. My name's Tim Dixon from IEGHG, and thank you very much to the CCSA for inviting me to be involved in this session. I think it's a really most interesting session. The in-person launch of the Global CCS Institute's Global Status of CCS report for 2022. I've been really impressed by this annual conference of the CCSAs, so thank you to all the staff who've worked on this. I watched some of it online yesterday, and I've been here for most of today as well. And to find out that it was oversubscribed, I think reflects the level of interest and motivation that there is now in this area. We have the same issue as well with our GHGT 16 conference is next week in Lyon in France. And we had to close registrations last week because we reached our limit of 1,100 international people coming to that. So good indicators, good problems to have in that sense. This launch of the CCS Global Status Report, I think we all eagerly await this because it charts the progress of CCUS deployment. And we look at the metrics that the Global CCS Institute produced with this. So we're going to have a 4-part session in this 30 minutes. We're going to have Guloren Turan from the Global CCS Institute to present a summary of the report. And then we're going to have Olivia Powis from the CCSA to provide a response from the CCSA's perspective. And then thirdly, myself to provide a response from IEGHG's perspective. And fourthly, and most important of all, open to questions from you all, to anybody on the panel, but in particular in relation to the CCUS 2022 report. So first of all, I'd like to invite up Guloren Turan. She's the General Manager of Advocacy at the Global CCS Institute, and she leads the Institute's policy engagement around the world, including international climate policy activities focused on the UNFCCC and its related bodies. Prior to the Institute, Guloren had an international career as a climate and energy executive at Trans-Adriatic Pipeline, the BG Group, and IHS-SERA. So Guloren, would you like to come up, please?
Good afternoon, everybody, and it's a great honor and pleasure to be here. For those of you that may not be familiar with the Global CCS Institute, we are an international think tank that aims to accelerate the deployment of carbon capture, storage, and removals as one of the key technologies to mitigate climate change, of course, working collaboratively with the CCSA and with IEGHG and similar organizations. Our flagship report is the annual Global Status of CCS report, which tracks key milestones for carbon capture and storage that have taken place over the past 12 months. Earlier this week, on Monday, we virtually released the report, and I'm really thankful to CCSA for giving me the opportunity today to present to you some of the key findings from the report. So I think the key headline for 2022 is we continue to see the pipeline of CCS projects, both in operation and under development, grow for the 5th year in a row. Today, the CCS facility pipeline of operating and in construction and under development projects is just short of 250 million tons. And that's significant because that represents an increase of 44% year on year from 2021. Driving that momentum was particularly policy and funding mechanisms put in place, enhancements put in place in North America, as we heard earlier from our colleagues from John Wilcox, and Europe as well. And when we look at around the world, we see private sector take more of a leading role in the APAC region. Having said this, and having underlined the strong momentum, of course, we cannot forget the fact that to reach our climate targets, the CCS, operating CCS capacity must increase by at least 100-fold by 2050. Here is the chart of the CCS facility pipeline, as you can see, from 2010 to 2022, and we've been seeing increased growth since 2017. Globally, at the moment, there are 30 CCS facilities in operation with the capacity to capture and store a little bit more than 40 million tons, around 43 million tons of CO2 per year. What has been driving this growth? So we like to underline 3 factors. Firstly, it's the net zero commitments from governments around the world, from businesses, and that combined with the increasing demand from the civil society to address climate change. Secondly, of course, it's the continued demand for products such as cement, steel, and fertilizers that are necessary for human and economic development, but to deliver them in a low carbon or ideally decarbonized way. And thirdly, the demand for economic prosperity and just transition as we move towards a zero economy. CCS is the common factor across all these demand contributors, and as you can see, it's that, hence we place it at the center of what's called the Venn diagram on the left part of the slide. So here is a map of CCS, the 30 CCS facilities that are currently operating around the world. And when you look at it, the leadership of North America, as we've heard numerous times today, is clear. US has got 13 operating facilities and Canada is 5. We have 4 operating CCS facilities in Europe. Unfortunately, none of them is in the UK, as we know at the moment, but hope to see quite a few in the next few years. China has got 3 facilities, and a number of countries around the world have a facility under operation each. And here's again, and this is a map of CCS facilities that are, and these are, by the way, all commercial facilities. We also track demo, but what I'm presenting on today are all commercial, larger scale facilities. This map shows the facilities that are under construction or in different stages of development. So there are around 150 plus facilities in development and 11 under construction. And compared to the previous map, I think what's really visible from this one is the increased reach, geographic reach of CCS, more countries. In 2022, we added 61 new facilities to the project development pipeline, and today there are 26 countries that have either an operational CCS facility or a CCS facility that's under development. So here are some of the key highlights. I think this is probably the sort of the summary slide from some of the findings from the report. What I personally find exciting is really exciting is that 4 new facilities started operations within the last 12 months. So we had 26 facilities in 2021. We now have 30. And 4 of these 4 operating facilities are in different countries. And one of them is the commercial facility, a commercial DAX facility, and the other one is first of its kind at that scale and commerciality, plus, of course, a post-combustion gas facility. So these are Red Trail Energy and Ethanol facility in the US, Glacier Gas Plant in Canada, Orca, the DAX facility in Iceland, and last but not least, Sinopec's petrochemical facility that started operations in China. And further to these, there are 11 facilities under construction. So CCSA's, the event is called Time to Deliver, and our report is called From Ambition to Action. I think the facilities that are getting on in operation, those that are under construction, is certainly underlining this momentum to deliver, which we want to see more of. When we look at the progress around the world, I mentioned that in some geographies, particularly in some countries, we have seen very strong government policy and funding support for CCS, and particularly Canada, Denmark. Denmark allocated 5 billion euros in a matter of a year and a half for CCS. And of course, US, as we heard again earlier today, particularly IRA and the Bipartisan Act. Versus in some other countries, I think it's worth to say that, and not that there hasn't been policy development, but private sector perhaps moving a little bit sort of at a faster pace and developing projects, having new projects enter the pipeline. And I would probably include UK among this category, together with countries in Southeast Asia, such as Indonesia and Malaysia, where the private sector is taking certainly a very sort of strong, being in the driving seat. And we have a number of countries that entered the CCS landscape, so to speak, for the first time, with commercial facilities now under development. Again, for the first time, I think notable is Germany. There's a transshipment hub there that's being developed, but Finland, France, and Timor-Leste. Now, this is a topic, storage, that we have discussed a fair bit today and that we at the Institute get a lot of questions on. Of the existing 30 facilities, the preferred method of storage was overwhelmingly enhanced oil recovery. More than half of the facilities that are operating today use enhanced oil recovery. But when you look at the graph, that shows 100 plus commercial storage sites that are either under construction or under development. So this is looking at the pipeline, looking forward. And 70% or more of the commercial CCS projects that are under development aim to use dedicated geological storage, which I think is quite important and relevant. Our analysis shows, and there's more detail in this in the report, that saline formations, deep saline formations, will be the most preferred method of CO2 storage, followed by depleted oil and gas reservoirs. And of course, we've got some of those in the UK, but also in Australia and Southeast Asia. So what this tells us is that more and more developers are not needing revenues from EOR, or not just relying on revenues for EOR to make the business case for CCS. I think it's also worth noting that projects are getting bigger, and of course this is also linked to the rise of CCS networks. And on average, the injection kind of capacity of a facility was around 1 million ton per annum of the operational facilities. But when we look forward, we see, some of the projects kind of aiming to inject 5 million tons per annum or more, and we expect to see the injection capacity perhaps even doubling in the next few years to come. So when it comes to, again, infrastructure, something we desperately need, and the key point about infrastructure, CCS infrastructure, is that it has started to happen. It's happening now. Networks are continuing to be a preferred way of method of development. As we know, networks help to scale up projects. They help reduce risk and reduce cost. And in terms of the networks, again, as we heard earlier this morning from the Longship project, there are currently 2 dedicated CO2 carrier ships under construction. But it's not only ships. We're looking at pipelines and, for example, subsea pipelines in Europe from Belgium and Germany to Norwegian North Sea are under assessment. And we've heard announcements from Equinor, the Wintershall and Fluxys in that regard. And innovation is taking place in storage as well. A good example is the Koda project in Iceland that is looking to develop and store CO2 in basalt rock formations. And storage licensing rounds have or are taking place in a number of countries, which shows the importance of and the interest in developing commercial storage resources. Last but not least, hydrogen. Earlier this year, we saw the first liquefied hydrogen being shipped from Australia and Japan. And these are all kind of different parts of the CCS infrastructure that we're starting to sort of see gather more momentum. We already touched upon carbon dioxide removal as well. CDR from the atmosphere at multi-gigaton scale is essential to achieve net zero emissions, and this was once more emphasized by the IPCC's mitigation report released earlier this year. CDR can be achieved through either nature-based solutions or engineered technology-based solutions such as BECCS and DACS. And it's that security and permanence of geological storage that's employed in BECCS and DACS is bringing the engineered CDR solutions more into focus. At the Institute, we took some modeling. Obviously, particularly when it comes to DACS, the cost of DACS today is high and is expected to decline quickly. We looked at the role of BECCS and DACS using our global emissions and economy model, and we looked at the future expected cost of DACS and how it might drive deployment. And as I'm sure you won't be surprised, there's quite a strong relation between the cost of DACS in the future and its level of deployment. And the chart on the right-hand side shows it, how much DACS can be deployed based on the cost. I think the most important thing that I take from the study of the report is that if the cost of DACS can be reduced to $200 or below, the cost of getting to net zero emissions by mid-century can be reduced by more than $1 trillion. That's, of course, also, and I should say engineered CDR has the benefit of not being limited by scale or geography. And of course, it can act as a backstop if the other technologies that we are looking to employ perhaps are not don't materialize to the scale that we'd like them to. CDR and point source CCS are both needed. They're very complementary, and they require significant investment in the pursuit of net zero. We already touched upon a lot of these points in the previous panel, so I feel like there's not much for me to add here, but clearly existing CCS projects have been overwhelmingly financed on balance sheet with grants from governments, but if we're to scale 100 times more, we'll need significant amount of finance and investment, including, of course, project finance. But we're also seeing that with the interest in sustainable lending, taxonomies are increasingly becoming an area of focus. And it's worth noting that CCS is formally recognized in EU's green taxonomy, with the delegated act setting out technical screening criteria. We've already touched upon carbon markets, both compliance and voluntary, and they will become increasingly important. Again, some of the points that we touched upon is the requirement to develop methodologies, and we expect these to converge for CCS. And we expect both voluntary and compliance markets adhere to similarly high levels of high-level principles when it comes to additionality, permanence, and verification. ESG considerations are becoming increasingly a stronger driver of climate action. CCS is already being reported under different ESG reporting schemes, and we're expecting to see more detail already being required by investors, and therefore more clear and perhaps harmonized disclosure methodologies for CCS being developed. And last but not least, although increasing development of CCS is really encouraging, we are far short of the scale we need to achieve net zero. We talk about the installed capacity of CCS needing to scale at least 100-fold from where we are today, which is around 40 million tons, to gigaton level by the middle of the century. And I'd like to emphasize that we think at least that this is very doable. And it's not just we, I think all three of us here on the panel think that it's very doable. It will require us to work together, governments to put in place supportive policy, private sector to build, own and operate, and financial sector to help provide the capital. We think that we can get there, and it's time to deliver. Thank you.
Thank you very much, Guloren. So, food for thought there. Now we'll move on to response from the CCSA. Olivia Powis is the head of the CCSA's UK office, where she works with the Chief Executive and the Board on developing the UK strategy and work programme of the CCSA. And previously she was Senior Policy Advisor at the National Infrastructure Commission and at Ofgem. So, Olivia, over to you.
Thank you, and thank you for the opportunity to feedback and give our comments on the report. We welcome the GCCSI's Global Status Report, and it really helps to set out the growth of CCUS worldwide. I think we've heard a lot over the last 2 days about the growth in the industry, particularly in the UK, but also the EU and US. And it's great to see in this report that there are over 160 projects in development, with well over half of those either in construction or advanced development. I think it's worth noting that, obviously, as Guloren covered, that I think 30% of those operational facilities are EOR. And we heard from Lord Turner this morning about the dangers of conflating these technologies, and if we are to get a common acceptance of CCUS. So I have to be brief in terms of what does this mean for the UK, and where are we in terms of having the measures in place that this report says are essential for success. So firstly, finance. We've heard the industry and financiers are ready to build, own and operate facilities if the proposed business models to support capital investment are legislated. Our colleagues in BEIS have been working hard with industry over the last 2 years to establish regulatory environments. And the finance sector is increasingly looking to incorporate CCS into their investment strategies. We've heard there's plenty of investment and private capital keen to invest in the UK clusters, but it's contingent on government sharing the demand risk through the allocation of emitter business model contracts to underpin that network investment. And then secondly, in the report was the critical role of government in terms of deploying CCUS. And so I've quickly gone against what you set out in the report and where we are in the UK against these. So the government obviously needs to implement policies that will unlock necessary private capital to realise CCS deployment at scale. And it's fair to say the UK is not short on ambition. We've legislated for net zero. We have set out the CCUS ambition. We had the 10-point plan, the net zero strategy, and now we've got the net zero review. So we're clear in terms of what we want to achieve in the UK. And the NSTA has launched a new licensing round to support the identification and appraisal of geological storage resources. We've identified opportunities for CCUS networks through the cluster sequencing programme to establish the transport and storage infrastructure and develop business models and an excellent regulatory regime. But we can't tick the box that you had in your list of having specific laws and regulations in place. And it's really essential that we move forward with the market-making legislation that's set out in the Energy Bill to provide industry and investors with the cost-reducing incentives and risk protections to launch and make that market in the UK. It needs to be accompanied by a multi-year allocation programme for emitter contracts to pump prime the industry in the UK. And I think if UK CO2 infrastructure isn't forthcoming, the businesses who are looking to invest will obviously go elsewhere to invest in the development of new low-carbon products elsewhere, and there are many other projects to choose from, including the US project proposals, which we heard from in the last session. We can't afford a further pause to the legislation and cluster programme, and the UK is on the cusp of delivery, but will soon start to lag behind. And I think we looked at that map that Guloren put up and need to think about where the UK will be in a year's time when we come back and hear from you on the following report. We heard from Minister Stuart and from Lord Hutton that we need to act quickly, we need to maximise the supply chain benefits and export potential and take that opportunity to lead CCUS from the UK, but we require the government to take swift action for us to do that. So I think a sort of last question to you, Guloren, is where do you think, how would you pitch the UK's progress against the relative pace of the EU, the US and the rest of the world, and where do you think we could be on that map and progress this time next year? Thank you.
Okay. Thank you very much, Olivia. And that can be the first question when we come to the questions then. Can I just check with our hosts on the timing for this session, because we started slightly late. What time would you like us to wrap up? Was it 10 past the hour? 5 minutes? Okay, because we've got to get time for questions from you in the audience. So thank you very much, Olivia, for that. A quick, a brief response from IEGHG then. Similar to CCSA and Olivia, very pleased to see the increase in the project numbers in the pipeline. Really important. We've heard today, and we all know how long it takes to develop projects. So we've got to get them into the pipeline to be developed. Good to hear about the policy developments as well. In particular, the US was already the best place to do projects, and now it's even better after the I mustn't say IRA, they've renamed it IRA, the Inflation Reduction Act. I was there in Pittsburgh the Monday after the Friday it got announced, and it came as a surprise to most people, and the excitement was just brilliant to be there. It's the largest climate change bill in the history of the world, not just the US, and CCS's 45Q enhancement of that is really important. Just to add, also noting the new project countries coming on, Germany, France, Finland and Timor-Leste mentioned. Really important to get new countries moving. One, we work at the COPs. We're going to be at COP27 in a few weeks' time with CCSA and the Global CCS Institute, and we're reaching out to all those other countries. So there's 26 countries have got CCS project developments. That leaves 160-something we've still got to work on, and that's what we're going to be doing at COP27 in Egypt. And also Timor-Leste, really important because they're a small island state. They carry more weight in the COP, in the UNFCCC sort of political process. And I gave a presentation to them, in fact, just 2 weeks ago. It's great that the World Bank's starting to fund some activity there, and Santos are involved and hoping to send their CO2 there. And in fact, they had their launch workshop just Monday this week. And I mentioned the World Bank. Kudos to the UK and the Norwegian governments for funding the World Bank and the Asian Development Bank's CCS trust funds. But those trust funds are coming to an end, and we really hope that the donor countries replenish those, because they help countries like Timor-Leste to get moving in assessing whether CO2 capture and storage is right for them. I'm going to jump on now to the infrastructure developments as well, very important. International hubs, we've seen Northern Lights being the role model here, because, as you know, it enables other countries and other projects to move ahead without the necessity of developing storage themselves. So where they may not have economically or technically viable storage, it opens up CCS to a lot more projects and countries. So kudos to Northern Lights for moving there, and we see other models moving forwards around the world as well. And kudos to the Global CCS Institute, not just for the report and the update, but their work on ESG and the ESG methodology. I think that's the only work that's out there for companies to use, and it's really important as it becomes more important for big companies and for the finance sector to report in terms of its ESG performance. There's a methodology from the Global Institute for you to use, and I recommend that. And I was just asked quickly to respond on, to say something about COP27 coming up. What do we expect from that supports the things that are in the Global Institute's report? Well, we expect further progress in developing the compliance carbon markets. We've heard about Article 6 earlier, the components of that, 6.2 between countries, 6.4 from projects. Work's ongoing there, particularly on the removals side, and we're involved in trying to input to that to make sure they don't uninvent the wheels that many of us helped put in place for CO2 geological storage over the years. And what we also hope is just more NDCs. So one of the big outcomes from from COP26 in Glasgow, Glasgow, one of the big outcomes from Glasgow was that the NDCs, which were required to be updated every 5 years, there's an invitation to update them in 1 year's time, this year. That's good. It gives countries a chance to increase their ambitions. The bad news is that only 20 countries have submitted those updated NDCs since Glasgow. And we want to see CCS in those. And that matters in particular for the developing countries who want to access climate finance, because that's used as one of the criteria by the climate finance agencies, that it's either in their NDC or in their technology needs assessments. So that's our response in general, and it's good to see in the NDC context, those are only looking to 2030, but the Paris Agreement also requires countries to submit their longer-term strategies looking to mid-century, and obviously they put their easy-to-do things in the NDCs, and then they realise they've got to reduce emissions further, so 80% of those long-term strategies have got CCS in, so that's very good. And the Global Institute cover that in that report as well. So that's our quick feedback. So now, questions. So the first question was from Olivia to Guloren on how's the UK doing?
And I think Olivia was asking how we'll feel next year. A lot of us in this room have been working on developing CCUS in the UK for a number of years now. And I remember what Niall McDowell just said earlier, kind of we had one round, we had the second round, and we're kind of going at it again. I think immense progress has been made so far, but the proof will be when we come back. We want to see the second sort of announcement on the clusters, et cetera, kind of there's been tremendous momentum from the private sector in the UK, kind of with developing projects. I think the proof will be when we see it, when we're together next year.
Okay, great. So we have roving mics. Let's take some questions from the floor. I saw the first hand over here.
Thank you. Davide Gilotti from Upstream. Question for Guloren, actually, a couple of questions. The first one, if you could comment briefly on how is it the Institute defines early development compared to advanced development stage when you sort of look at the project, and what does that tell us in terms of the timeline? And the second point, if you could comment on essentially, we've seen how many new projects have come online. I think 4, you said, 11 in construction. Yep. But how many were during the past year? At the same time, how many were abandoned or suspended at that time? And what can we learn from that?
Quick answer, and not all of the numbers are from the top of my head, but advanced development is post-feed versus early development is announced and sort of undertaking various different studies, including pre-feed. 11 under construction. I think they're all entered construction new this year. In terms of what's suspended, 2 facilities were suspended in North America, but not last year. It was the year before, I think, 2020. And if you have any further, please kind of see me afterwards, and I'm happy to help.
Okay, thank you very much. I see a question in the middle, if the mic can reach. Oh, you've got a mic already. Great.
Already. I'm prepared. Iron interconnector. David Parkins said from Progressive Energy said to the conference right at the start that the one metric we will be measured by as an industry is how many tons of CO2 have we put in the ground. I wonder whether you might want to adopt that metric in your report for the coming years and maybe even distinguish it between how much is for EOR and how much is non-EOR storage.
I think that that's a great question and a great suggestion. The difficulty is actually sort of different jurisdictions have different requirements for reporting how much CO2 is stored. So at the moment, it's much more kind of I suppose data-wise, easier capture capacity is easier to collect, but we've been looking at it. And I think as the industry evolves more, certainly we're going to be looking much more at adding the kind of how much is actually put on the ground, which is above 200 million tons so far since the inception of CCS in the sort of 1970s. But that will become, I think, the metric to watch and monitor. I agree with that.
Good question and good answer. Any other questions? If not, then we'll wrap the session up. So can we thank Guloren and all the colleagues at the Institute, and can we thank Olivia?
Thank you.
And the next session is in the same room, so stay in your seats unless you need the toilet.
Right. I'm going to start the session even though I'm not quite sure where Stuart is. There he is. Really recognise now that we stand between you and getting home on time and getting your dinner and getting your train and all those good things. It's great to still see so many of you here. The purpose of this session really is to sort of reflect on what we've heard through the day of the conference, also to hear your thoughts on that as well. And we're going to try and close on time at 4:35. And I've got a few bits and pieces about closing the conference. But I'm Ruth Herbert, I'm CEO of the CCSA. If you haven't already seen me at some point over the last 2 days, I've been around quite a bit yesterday, spoke rather too much yesterday. So this is called Achieving Climate Neutrality Through Strong Cooperation, and I'm really delighted that we've got 3 people here to discuss with me and with all of you their reflections on the last 2 days, anything new they've heard, interesting takeaways, and with sort of specific emphasis on the things that they're leading and working on. So I'm delighted that I've got here, I think we're starting with Stuart, but Stuart Haszeldine from SCCS. He's Director and Professor of Carbon Capture and Storage at the University of Edinburgh. I'm just going to ask him a bit, some of the key themes you've heard. What are any big takeaways from the last 2 days? I'm particularly thinking about the whole system perspective, energy and industrial decarbonisation, and sort of, are there any key sort of urgent things you think we need to be, it's all very urgent, but taking forward in a way in our messaging as CCSA and the industry towards COP27 and beyond?
Okay, so I guess the first thing is that having been in this a little while, 5 years ago or 6 years ago, we'd have had the conference with this group of people in the front row. And this conference is special because we've got not 100 people, not 20 people, but we've got 450 people. And the conversations I've been part of are across the whole chain of development, right from people building projects, researching capture, talking about storage, but also talking internationally, not just about the UK, but talking about Europe, talking about the United States talking about the Southern Hemisphere, the Far East. So that's an unprecedented set of opportunities we can access and bring together. And you guys are brought together in the UK. So I think that's really, really positive. And so the message over there throughout all that is that the CCS ambition is ready to build and ready to go. The companies are queuing up, people are queuing up to have licenses, we're ready to build. But then I think we also need to be aware that we still need to have a fit in the UK, at any rate, we need to have a fit with what else is going on. And the key fit for me, the whole rationale behind CCS is about the climate change mitigation, because unless we sort out climate change, then there's no point in having a conference, because none of us will be here. And so the fit has been well articulated about you can't do net zero unless you have CCS. An essential part of the CCS is decreasing emissions, but also removing emissions, and those are two very different things. Decreasing emissions through conventional CCS, removing emissions through DACs or BECs done properly and properly regulated. And we need both of those, and we're still only having conversations about the very first one at the moment. And if we're going to have this agenda to get to 2030, 2035, we need to be motoring on the BECs and the recovery out of the atmosphere. But I think we also, I've got one couple more points, right? So the key thing is why now? I think we're at an unusual juncture in the UK. So I just checked before I came on, and we still have the same Prime Minister today. But we're at a time of great flux, and when flux happens, that means uncertainty. So there's actually no real guarantee that CCS will continue beyond next week at the moment, if we're being realistically negative about it. So I think we also need to reflect on what do we offer and why now in the UK. And my answers for that is obviously there's lots of jobs at stake, there's lots of investment could come in, infrastructure build, potential for exports, potential for massive industry change. The CCS groups are ready, the competition process is running its way through, and we'll have a very well regulated set of projects. And in many ways, really, it's now or never if the UK is going to maintain any semblance of leading the world in CCS, because if we come back next year, then other countries will undoubtedly have moved on. And if we fail to move on now, then we will not easily get back. So those are all messages to communicate to government, if anybody knows who the government is. And so this, just to finish off, this last thing is the political, on any risk register for the UK, then the political risk to me always seems to come out at number 5 in probability and number 5 in impact. And that's still not been controlled. So we have a very pronounced political risk. And so how do we actually communicate that? How can we help BEIS to communicate that in the discussions with Treasury or with number 10? So we have to, rather than looking for government to support us all the time, sometimes we need to go back and we need to support our friends in BEIS some of the time. So if we can think of ways of doing that over the next weeks or months, then that would be really useful. And lastly, a couple of questions. I think we had some impromptu pre-prepared statements this morning, but I think some of that has good questions to answer. Why are oil companies only investing 2% or 5% of their multi-billion-dollar profits in CCS if they're really serious about survival, if they're really serious about changing the system and leading that change? That looks like leading from the back seat to me still. And I can understand why they're only investing in very secure pension funds and all that, but that we have a limited amount of time, and I'm going to guess that unless oil companies and the established fossil fuel industry get it together to lead this out of the morass and lead this into the sunny uplands of the future, by 2025 or 2027, then the chance will have passed, and we'll find other ways to be working our energy. And then the second thing is I've heard several times that because of the way the UK is controlling the licensing and development of projects, there's a big queue of developments. And that's not helpful for rapid change. That's not helpful for encouraging investment into the UK. If you can get paid just as much or more in the United States with quick decisions, then as always, go there. So we need to make our decision making quicker. And I'm an advocate of trying to take CCS back away from government as soon as possible. So as soon as we can get the first 2 projects up and running and demonstrating that the projects can capture, transport and store CO2 under the tight regulations we've got, then we should open that up. And instead of giving projects being monitored and led by BEIS, we need to introduce what I've called the carbon take-back obligation, where we just place the mandate on oil companies that they have to do the storage somehow, somewhere in the UK, and government can just monitor the success rather than lead the development all the way through. So that's a way of speeding up. As Guloren said, it's often said we need to be going 100 times faster than we are now. And if we want to go 100 times faster, we'd better start finding ways of pressing the accelerator. So that's it.
Thank you. And I think, just wanted to pick out one of those things that really resonated with me, which is this point about helping government. I think CCSA has taken a deliberate decision. It's a strategy of ours to try to partner with government, to try to help them get the information, the knowledge they need, the access to the real experts to kind of decide how they want to design that framework and to support them in that. So I think that's absolutely at the heart of what we've been doing. And we heard from Alex Millward last night, actually, at the reception, that particularly things like, our projections for the growth of the low carbon products market, for example, tangible sort of numbers, if you like, that we can use to show what the size of this prize really is if we get this right. This is also a really good business opportunity as much as it is a climate necessity. And I think we need to be making both those arguments when we engage with government, which perhaps we haven't done in the past. So yeah, really spot on. And talking about, making sure that we engage with society properly, that's been a really big theme. We've been talking to a lot of the protesters that have been coming in and out. A lot of them sat through most of yesterday. And we're learning a lot and talking to people at reception. And I really like the fact that they're in here talking to people, hearing different viewpoints. They're entitled to their own views as well, of course, and we've listened. So I think that's really good, and we need more of that. And we've set up an NGOs forum to try to have more of that dialogue on an ongoing basis. But,
I think that's absolutely the right sort of thing to do, because those people have got a very different sort of energy, a very different way of communicating, a very different way of utilising media to get their expectations and requests and asks out. And that communicates to the voters. And the voters may not like having to walk around somebody on the pavement for 30 seconds, but it has raised the level of debate and the amount of debate and the urgency of debate. So they're not planning for 2050, those guys. They're planning for 2025. And you may think that's crazy, but at least it is bringing the decisions into the here and now, which is what politicians have to decide on.
Yeah, absolutely. I think all pressure towards tackling climate change quicker is good pressure. So Francesca, we've got Francesca Bell here. I'm really delighted. She's from OEUK, but she's more importantly, I think, co-chair of the UK CCUS Early Careers Professional Forum, which CCSA team are also involved in. And I'm asking you for your reflections on the conference with particular focus on how do we raise the awareness of CCUS amongst young professionals. We had a skills panel yesterday talking about how do we get more people into this field, and I'd really like to hear your thoughts on that, and also a bit, I suppose, about how we talk to young people within the sector and young people outside of the sector.
No, definitely. So I think, thanks for having me, and I think the kind of elephant in the room, or the key thing to point out on this, is whilst we're in early careers, the traditional early careers is the first 10 years of their career you're in it. And if you look into the UK, I'm sure there's not a majority of people who've been working solely on CCUS for the last 10 years. We've got geologists and engineers and project managers and HSEs who've done great careers in other spaces, lots of them in oil and gas, who will move over into CCUS. But it's difficult as that new person, because you don't have that clear path yet of what does a 30-year person in CCUS in the UK look like. So it is challenging. So then you go, is it a little chicken and egg? Do you need to have the projects to help people understand what it is? Or do you need the people to help you do the projects? Chris was talking in the hydrogen section about diversity of sources of energy. Actually, I think what we need is diversity of thought in the conversation, and Chris is nodding, so I'm sure he agrees. And that's sort of what this forum is trying to do, bring that diversity of thought, not because we all want to run off in different spaces. I think we all agree in the room here that CCUS needs to happen, and we need to get after it. But there's lots of ways to skin a cat, or whatever analogy you want to use there. There's lots of different ways to do it. And I think the protesters who were here this morning, who had very clear views, they're just looking for that outlet. They want to engage in the conversation. And I think there's an opportunity for everyone in this room to help people understand what we're doing in CCUS, why we're moving it forwards, why it's important to have those people in the camp. I'd far rather have them inside the tent and pushing us around and trying to get us to push it forwards than standing on the outside. But again, it's that chicken and egg thing. Once we start to see projects kicking off, will that help? Or do we need to do something first to help push it forwards? And I don't know the answer to that question.
Yeah. Well, perhaps we'll have some more views from the floor on that in a moment, so thank you for that. I hope that our final speaker, I understand, is standing by to come in on the screen there. I hope that she's been able to hear what we've been saying and she can join in seamlessly. But Katherine Romanak, research scientist from the University of Texas, has done a huge amount to raise global awareness and education on CCUS and has worked very closely with the CCSA on that over many years. And so, Katherine, your reflections that you've been watching, so I hope that the IT has worked and you've been able to watch the plenary sessions of the conference, or you've had time to, but your position, I suppose, as an environmental geochemist, but someone also is now trying to sort of train and teach others in this sphere, really interested in what you think about what you've heard in the conference, and then a global, more of an international perspective from the work you do, maybe some of what Guloren shared about global process. And what do you think we should be taking forward to COP27 and to anyone that will listen on this?
Thank you, Ruth. And I do want to thank CCSA for having me speak today. And I want to thank you for the years of collaboration that we've had in winning these official UN side events at the COPs. It's really important. And this is a place where strong cooperation has really been, useful, because at the COPs, there is still a great need for input on CCS. So many people just still need the information. It's very important. And I know we wouldn't have been so successful if we didn't have your cooperation. So thank you. So I am talking about strong cooperation, and I want to echo Tim Dixon's remarks from earlier. It's really, really important what we do at the COPs with getting CCS technology funded and technology transfer to developing countries at the COPs. And I also want to say that Francesca's remarks were also right on. Exactly. I'm agreeing with those very much. I'd like to talk about some additional areas of cooperation that maybe you haven't thought about. And this is from the perspective, as you said, from my perspective as a researcher in the US. And I've been working on this technology for 15 years under the US DOE Regional Carbon Sequestration and Partnership Program. And the beauty of that program is that it's systematically, over the past 20 years, scaled up CCS through small pilot projects and demonstration projects. And so what we have here in the US is rare and valuable project experience. It's so important. And as Francesca said, how do these young professionals, or how do these professionals that are looking to get into CCS, how do they gain that experience? And so I think, especially as we are seeing drivers, economic drivers in the US, we see 45Q tax credit expansion, we see the low carbon fuel standard, CCS protocol. Companies are really, really looking to get into this space. And we're looking at subsurface oil and gas operators, we're looking at subsurface engineering firms, environmental consulting companies, all wanting to use their skills in the space. And it's really important because they have the skills that we need. But there are very subtle and important aspects of CO2 storage that the academics have been spending their careers developing and researching. And these are subtleties that are extremely important to project success. So I want to highlight the importance of these companies cooperating with the academics that have been studying CCS for a very long time. I think this is the winning combination that can actually give these professionals kind of the edge that they need to use those skills for CCS. And in fact, we're now we're doing a training course for this very purpose. It's a really important aspect of cooperation between industry and academia for moving these projects forward successfully. Another really important aspect that I wanted to bring out is just, you know, the experience that we have in the US is all onshore. So whereas we have the project experience, which is really important, we don't know how to do offshore storage. And so we have in recent years been looking to Europe, to Japan, to other countries that have been actually doing offshore storage. We've been looking to them to teach us how to do that. In the UK, you have very good experience in marine science, marine monitoring. And so in order to kind of bolster up that collaboration, we developed the International Workshop on Offshore Geological CO2 Storage Series, which where we bring in countries and companies that are doing offshore storage so that we could learn how to do it. And so there's still a lot of international cooperation and technology transfer that needs to happen. We just had our last one, the 5th one in New Orleans last spring, and we're looking to do the next one in Scotland with Storega. So we're very much looking forward to that. And if anyone's interested in that, please contact either Tim Dixon or myself, as we are the co-chairs of that workshop series. And then the last thing, and this also is really important in the COPs, is the cooperation, and I want to actually call it cooperation with the general public, as Francesca said. It's so important, and what we're seeing in the US right now is we're seeing that as our projects are moving forward and being developed, most of the public has not even heard of CCS. And so they're not sensitized to the fact that all of a sudden they're hearing about a project being planned in their backyard and they've never even heard of this. And so we really need to start working with and cooperating with the general public. And as Francesca said, keeping them inside, and Ruth has said, keeping them inside the loop and really cooperating with them, because for them to see that there's a project coming near their homes and they've not even heard of it is not helping us. So those are some areas that I hope maybe give you some new thoughts about different types of cooperation that we can use moving forward.
Really helpful to get that perspective. Thank you, Katherine. So given time, I think what we'll do is go straight into questions and just get some feedback from the floor. Your thoughts, reflections, things you want to ask the panel. I think we still have Katherine, hopefully.
Yeah.
Anybody in the room?
Hi. Brian Sweeney, is it on?
I think so.
I'm going to repeat myself because I keep on hearing the message. I love what Stuart said. I love what you all said, but I love what Stuart said. Because we need to accelerate. We all agree we need to accelerate, but there's this uncertainty. We're dependent on the government support. We're dependent on the civil services getting us through these projects and getting them underway and monitoring them. I would like to suggest that it's difficult to criticize the government and it's difficult to criticize the civil service. So let's try and lift it off them. Can we agree as this room, our policy, maybe not CCSA policy, that's too difficult. This room's policy is we need either a carbon price that is wider and deeper and therefore the projects happen because the companies want to do them, or we have CTBO, carbon take-back obligations, so that the companies have to do them. But we need to get away from being dependent on the Chancellor and the civil service and get on and accelerate CCS.
Well, and CCSA. Definitely.
And CCSA.
Definitely. I would say actually, I mean, the discussions that I've had with the Secretary of State for Bays last week, you know, he's very, very excited by the idea of business getting on and doing this. But I think we just have to be really, really careful that we transition to that. So I think, as you were saying, Stuart, it's not, if he basically came away thinking, well, you know, if he came away from a discussion thinking, we don't need the legislation and we don't need any support from government, we can just do it, that was wrong. And in fact, what we need is the government to pump prime, but for a limited time, to get this basic infrastructure in place. Then, yes, agree, let's let this market go and let people invest and get on with it. But we mustn't, if we try to jump that first step, I believe nothing will happen. I could be wrong, but I'm pretty certain. So, you know, and that's my view, and I'm afraid I've jumped in and I should be chairing. But
I think there's an interesting piece there, and it's been in every single session, whether we're talking about hydrogen, we were talking about what's happening in the US, wherever. There's this thing about cooperation or collaboration or whatever variation of that word you want to use. And for me, it's a little bit like if we don't all play that together, so that's interaction with government, but it's also in projects too. It's got to be the captures, the transport and storage. It's all got to go in one system, because otherwise you end up with bridges without anything to connect them to. And you've maybe not got the bridge built up because there've been people standing throwing stones at it because they've not quite understood why you're building the bridge. I'm stretching my analogy a little bit there, but I think the point is that if we don't put them all together, and as Ruth says, it needs to start somewhere, it needs some handrails around it to grow it up, and then I'm fully supportive of as and when appropriate and the market allows it, then the handrails come off and we just sort of set it running. It's a long marathon that we're in rather than a short sprint, albeit we need to be running far faster marathons than what we are running now.
Yeah, and so yeah, I agree that I guess you can make the analogy that you've really got to have a working model before you sell it. There's no point in trying to sell a Lego kit with no wheels on, because everybody's very disappointed. And so we need to try and support Bays to get through these projects, these first two clusters, as rapidly as possible, whilst preparing. And I'm not saying to not issue Track 2 permissions, but we might want to issue Track 2 permissions in a slightly different and faster way, because we've already proved a lot of the regulation and licensing process actually works. And but once people see carbon dioxide manifestly moving through a pipe from a capture location to a storage location, then even venture capital investors may part with their money at that point, because it's much more certain and you get your money back in 3 years. You know, that's the usual criterion. Yeah. And we want to be heading for that as soon as fast as possible. So I take great optimism from the licensing round, which North Sea Transition Authority ran, but we still need to turn those statements of interest into project teams and permissions to develop.
Yeah, indeed. And I guess, Katherine, you're on the screen there, but the tax incentives in the US now, great, and that will pump prime, but clearly, there'll be a vision for this moving forward without support in the future, right? And this all links, of course, to the growth of the voluntary markets we heard in the earlier session, and also compliance market for ETS, which is really crucial, I think, to driving that long-term commercial market for CCUS.
And what we also have with CCS, of course, is not the total voluntary hope of reducing emissions through some speculative tree planting in a country that you've never heard of, but uniquely we offer a method of storing CO2 which is achievable, demonstrable, and extremely verifiable to a high degree of accuracy for a very, very long period of time. And so that's a unique sell.
It's a gold standard of storage, isn't it?
It's platinum, diamond, whatever
platinum,
standard
whatever.
you want. Standard, yeah.
So, and that's something I think that also, those trading and seeing that, CO2, we heard people saying, the Commission earlier, CO2 will be a traded commodity. We can see there'll be a European CO2 market. Yeah. There'll be CO2 flowing where it can go cheapest and, being traded. And really that requires the kind of really high standard for storage, because countries have to know that.
Because these people, these investors will have to submit their storage to their ESG compliance committee or something. So it has to be understandable and verifiable by people who know very little about this. And so if you've got the chance of investing in, I don't know, 2 tractors crushing rock and spraying it around some fields, or you've got the chance in investing in some CO2 going down a hole, and it's definitely there, and you can come back in 10 years or 20 years or 50 years and see it's still there, then that's the way we should, that's a different way of selling the quality of what we're trying to do.
And that's also, if we've got people who are challenging about, greenwashing, or they're saying that we're not going quick enough and fast enough, if you can verify exactly what your project, surely that helps on that stakeholder piece, bringing people into the tent or the room, or
actually getting some large quantities stored under the North Sea would be really good.
Yeah, it would be cool.
Right, that's what we're here for.
But we have some stored under the North Sea already in the Norwegian side, and just to illustrate it, you can use the seismic reflection evidence to effectively measure 10 trees worth of carbon dioxide to put it into those different units. So anybody who wants to plant a forest, tell me if you can measure that to 10 trees worth of carbon dioxide or not.
Yeah, so the monitoring is accurate. And Katherine, sorry, you wanted to come in.
Yeah, I wanted to respond to your question because I think it's really interesting. You're right. You're right that this is not, that a tax credit that we have right now is not sustainable. But I will say that it's an interesting exercise because it is really catapulting the next steps. So it's catapulting industry finally really seriously thinking about moving forward, and it's taking us to the next step. And it's an amazing process because we're learning so much in the process of these companies wanting to move forward with these projects, and they're recognizing where their knowledge needs to be bolstered. And so I completely agree that we need carbon take back, and we need, to move to the next phase of incentivizing these projects. But for now, I would say that it's been very useful in catapulting us to the next step.
Yeah, and we can see that. We've seen and heard a lot about that over the last 2 days. So I think the UK framework that the government's developed is very investable. We just need to get that same pace going now. We need to just get that in place here. But it's also really interesting to see Europe moving forward quickly. So if we keep talking, we keep getting people together, but we also go away and in our projects and in our companies act and engage more people, bring in more people into this space from our companies, from our kind of academic environments, and I'm sure, because the amount of knowledge and capability over these 2 days in these rooms has been phenomenal. I'm sure that we can get there as soon as possible, way before 2030. So I'm really just delighted that you've all spent your time with us to hear all of this. I want to thank the panelists for what they have said. And before we kind of thank them properly, I just want to wrap up the conference. It's time to go. It's been a wonderful 2 days. We thank all the speakers, all the sponsors. We wouldn't be here in this wonderful venue without them. All of you for giving us your time and energy, and for the great questions and the great engagement in coffee and lunch. We really just want to finally just thank the CCSA team, because I feel that they have gone above and beyond with this conference over the last few days. They're standing at the back. There they are. Yeah, there's only 12 of us, so it's a pretty good job. And also for our conference organisers, Legacy, for supporting us in that. And just to say, we're going to send you a survey, send us feedback. We know not everything ran completely smoothly. Really want to hear your feedback and do better on that. Also on the sessions, what you liked, what you want more of, what you want less of. We really want to hear that. All the plenaries will be available on the app for rewatch, so please do that if you missed them earlier. And once we have permission from speakers, we'll make all the PowerPoints available on the CCSA website and also on the conference app. Just finally, our friends from Just Stop Oil are still outside, I think. Oh no, they've gone, have they? They've moved. Okay, fine. I was going to say, if say hello on the way out. And if you didn't want to go that way, we'll get you out another way. But I think it's been really fantastic. So I just wanted to say thanks for coming and thank you to, I think that was everything. Sorry, that distracted me.
See you next year.
Yeah, see you next year, and maybe we need somewhere even bigger. But thanks very much to the panellists as well.
Well done. Good, well done.